Hi guys, welcome back to the channel. If you are new, please consider subscribing. That's the only way you will get notified when we post new videos. Like this video, that's the only thing I'll ever ask you to do. So please like the video. You do not pay for anything. I'll never ask you to pay for anything. Basically everything is for free. Everything that you get from me is for free, so the least you can do is to like the video. Thank you for that. If you're looking to download systems, indicators, robots, stuff like that, there are links in the description box below. Visit the blogs and go through them and see if you cannot find what you're looking for. Then you can always come back and leave a request in the comment section below, and I'll try my best to look for what you will be looking for you. Let's get into today's video. The 3 key things that will help you to make money in forex trading with NASDAQ 100, NAS100 as people like to call it. My broker calls it US100 cash. Links to the blog are in the description box below if you want to find out. So what are the 3 key things that you need to pay attention to in order to make money with NASDAQ 100, which is an index? Let's start with number 3. Number 3 is entries. Entries. You need to have an idea of how you are going to take your entries. Basically, you want to go with the trend. You want to find a trend and you go with that trend. Basically, your entries, you are going to be making them on the smaller time frames. Of course, smaller time frame means a different thing to different people on the size of the account. For example, if you've got $1 million to play with, 4 hours daily might be a lower time frame for you. You probably are taking positions, so you're a position trader and you are looking at the weekly and the monthly. And obviously, if you are the majority of the retail traders, you probably have $1,000 in your account. So lower time frames is probably the hourly or the 30-minute or the 15-minute or the 5-minute or the minute, depending on the amount of money in your account. But generally, if we are talking about retail day traders, when we are looking at the lower time frames, I would say anything below the hourly, and usually anything below 30 minutes for me is lower time frames. So what you need to do is, when you first enter the charts, you need to look for the trend direction on the daily chart, and also on the 4-hourly chart. What you want to try to do is to have your daily chart and the 4-hourly chart pointing in one direction. Then you don't want to have your 4-hourly chart is bearish and your daily time frame is bullish. I try to have my daily time frame and my 4-hourly both pointing in one direction. Then from there, I can easily drop down to the 15-minute time frame or the 5-minute time frame. Then I can get there and find my entries. So that's about entries. You need to determine how you are going to be making your entries. On number 2 is an important one, and yet many people forget about it. Many people forget this point, yet it's so simple and it's the most obvious one. When it comes to NASDAQ 100 and also US30, I think, and US 500 as my broker calls it. So I'm on the weekly now. I think I am going to the monthly. It's still the weekly. When it comes to the indices, most people forget this key point, and yet it's the simple key to making a lot of money with indices. What indices are basically baskets of various stocks. Indices are basically baskets of various stocks. When we're talking about NASDAQ100, it's a basket of the 100 best technology companies in the US. So they've been put together and to make a tradable index or tradable instrument for people who do not have time or do not want to trade individual stocks, people like me and you. So it's easy to make money with Apple, Google, Facebook, Amazon, Tesla, all of those big companies combined together than to sit every day and just try to trade Apple, Google, Facebook as an individual stock. What that means also is bias. The general bias of NAS100, US30 and 500, US 500 is generally bullish. That's the general bias. It doesn't mean that there are no pullbacks or selling. Yes, there's going to be selling. For example, in this instance, we are on the weekly now. I think let's go to the monthly. Let's go to the monthly. This is MT5. If you use MT5, you know, sometimes it can be a bore. It takes time to load data. But I hope I can illustrate my point as soon as it's done. So generally, a second point is you need to be aware of the fact that the indices are generally always buying. Of course, there is going to be sales, there is going to be pullbacks, but that's what they are. They are just pullbacks. But the general bias is buying. Why? Because we are trading companies. We are trading real companies in the real world out there. And generally, every company over time, it wants to go up. Every company wants to be making profit, to be making lots of money. So generally, all these companies are looking to grow. They are going up. Amazon, Google, Facebook, Tesla, or every company that you can think of wants to be going up. So what that means is also it's going to drive that company's stock price up. As long as that company is performing, its stock price is going to go up. So what does that mean when the company's stock is going to go up? It means if it's added to the NASDAQ100 or if it's added to the US30 or to the US 500, it's also going to pull up that basket of stocks. So you find that the general bias of NASDAQ, US30, all these indices is up because that's the direction of companies, that's the direction of stocks, that's the direction of the stock market. Yes, there's going to be pullbacks. There's going to be pullbacks. You can see here, there's going to be pullbacks, but you can see the pullbacks are easily swallowed by the overall uptrend. You can see this is my screen as far as it can go back. 2015, okay, 2011, 2014, 2013, 2015, 2016, 2017. But you can tell from 2011 where my phone can go back to, it's generally just going up. Why would you sell? Of course, you're going to have opportunities for minor sales, but you are not going to be selling for a long time. Don't try to sell indices for a long time. You understand that they are only minor pullbacks. if you are taking your sales, understand it's minor pullbacks. Don't try to hold your sales for months or for weeks, or it might happen. It might happen. You can never say never, but generally the bias is bullish. So once you understand that, it means I'm on the monthly now. Let's drop down to the daily. What you just want to do is you just want to wait at the pullbacks. You just want to wait at the pullbacks. If you find that the sales are too risky, of course they are too risky because the general direction is bullish. So those that are selling, it's generally taking more risk. It's not saying that it can't be done. Yes, you can do it, but understand that the general direction of the market is going up. So you don't need to be selling these indices. You can simply just wait at the pullbacks. Just when you see the market is pulling back, then you simply just chill and you wait to spot when the market is picking up again after its pullback. Then you can simply buy. Generally, you can buy and hold for days. You can buy and hold for days. Of course, you need to be able to manage your risk, and you need to be able to make sure that things are still going according to plan. But as we saw from the monthly, you can check your charts. I'm not talking about things that are out of this world. The indices are generally going up. So we said third point is understand entries. Find direction on the daily and on the 4-hour chart, and find your entries to match your direction, your bias on the 15, 30 minute, 5 minute, 1 minute, 1 hour. I don't know what suits, what rocks your boat. Secondly, we said understand that the indices are generally going up. With that idea only, you're guaranteed to make money. Just wait for the pullbacks. Just find the spots where the pullbacks are and just buy, and watch your money get tripled. Talking about tripling money, we come to the first and most important point. Most people get into indices trading with the wrong approach. Trust me guys, it's very easy to make a lot of money trading indices. Very easy. You wait a month with forex trading to make, say, 1,000 pips. With indices, you can make 1,000 pips every day, 1,000 pips every few hours, 1,000 pips. You will not believe it. But if things do not go your way, it's also easily a way to lose money. That's how things are with indices. You can make your money very fast like that when things move your way, but you can also easily lose your money. That's why it's important to have risk management, because indices are very volatile. They are so volatile. Watch this candle. Watch this candle. If you probably had bought here, say you bought there, and you walked away thinking after 2 hours you'll be in the money. Look at what happened here. And obviously for the person who sold there, they smiled all the way to the bank. They were smiling. They probably were jumping up and down. That's how indices are. So the major point, the first point that you need to understand is risk management. You cannot afford to just trade indices without risk management. You need an idea of your lot sizing. I usually advise people, if your account is less than $1,000, less than $500, less than $100, of course you can trade with less than $100, stick to 0.01 lot size. Don't try to be funny and get tempted by what you see on social media, where people are just trading one standard lot, 10 standard lots, just like that. Sometimes if you're correct and with experience, certainly you can make a lot of money. But if you are wrong, trust me, you will hate the day that you did that. So in order to stay longer in the market, I advise that your lot sizing, determine your lot sizing. A quick way to determine your lot sizing is take the amount of money in your account and divide it by 100,000. That gives you an idea of which lot sizing you need to be using for your entries. And you place your 0.01 and chill. Don't try and place multiple trades unless your account can handle the drawdown, because there might be drawdown. There might be some drawdown and your account might not be able to survive that. You might be correct. Yes, you are correct, but the market is still not ready to go up or to go your direction or to go down. So the market would do, for example, a person who sold here, of course they are correct, but the market or the person who sold here, of course they are correct, but the market was not ready, so it did some pullback. This is what we call some drawdown. Here accounts were blown. So you need to determine whether your account can handle this drawdown and still be able to survive that, so that you can make your money. So watch your lot sizing, watch your leveraging, and stop losses. I understand people love to use the standard 30 pip stop loss and stuff like that. I would advise that with indices you determine the best stop loss. Probably set it at 100 if your account can handle it, but definitely your stop losses, you need to determine your stop loss depending on market conditions. Usually people just have this idea of well, every time I must set a 20 pip 30 pip stop loss. You need to pay attention to market conditions, because the market is dynamic. Sometimes there's too much volatility, so your 30 pip stop loss is not going to protect you if there's too much volatility. But if there's no volatility, then of course your 20 pip stop loss is fine. So stop losses are not a standard thing. You need to put your stop loss depending on market conditions. So I just thought, let me share with you these simple but essential 3 keys to making money with NASDAQ 100 and certainly the other tradable indices, your US30, German 30, Italian 50, UK 100 and all that stuff. You can easily apply this same information. First of all, your entries, make sure you determine direction on the daily, on the 4-hourly. We don't usually go to the weekly and the monthly, because most of us, we don't have the millions in our trading accounts, so any volatility might easily take us out. So we are looking for entries on the lower time frames. So you determine trends on the higher time frames, the daily and the 4-hourly, then you jump down to the 15-minute and 5-minute, 1-minute, 30-minute, whatever rocks your boat, then you find your entries from there. Then we say second thing is general bias. Understand that most of the time with these indices, people who are buying are going to be in the money more than people who are selling. If you are selling, understand that it's a short term thing, because the general direction of the markets is up. So your buyers, your bulls, they are going to be the guys that money. Understand that general bias is up. General bias is buying. Buy the dips. Wait for the dips. Wait for the dips. Don't try and find things. Wait for the dips. Buy the dips and just ride along. Then we said risk management, a very important thing that people tend to forget. Risk management. Indices are very volatile. You can make a lot of money, but you can also lose a lot of money just like that. just like that. It goes both ways. So determine your stop loss, determine your lot sizes, and understand leveraging, because indices are not your forex pairs. Leave a comment in the comment section below if you have a topic that you want me to do a video on, anything that you need. Like this video, and that's the only thing I'll ever ask you to do. You don't pay for anything. Subscribe if you are not yet subscribed. Until next time, guys, make that money.